What's up YouTube and welcome back. I know I've been MIA for the last few days because I've been moving, but y'all better believe that I wouldn't miss a Sunday stock talk. So as always, I'll be bringing you some news that came out over the weekend and what effects that it could have on the stock market, the stocks that I'm watching this week that I think are going to be making some huge moves, and also I'll be showing you what I bought last week for my long-term portfolio. So with that all said guys, let's get into the trades.
Alright, here are the 5 stocks on my watch list this week. So it's Bank of America, Disney, Alibaba, Home Depot, and Expedia. I want to start with Disney. As you can see here, Disney is saying that they will reopen some of their shopping area at the Florida resort on Wednesday of this week. This reopening news seems pretty unexpected, so I don't think that it's priced into the market, and I think that Disney might see a huge surge in value because of this move. And while their parks remain closed, this will provide another revenue stream for their company, and hopefully they can start turning more profits. Given this, I think that Disney is going to be going up this week, and I might buy a call option with a 2 or 3 month expiration date for a strike price of $115. Now, the second stock that I want to talk about is Bank of America. So they recently came out with a bond that is related to the health crisis we're experiencing. So they are selling a first of a kind COVID-19 bond. This is a $1 billion corporate bond to aid the health industry, specifically nonprofit hospitals, medical equipment companies, and companies which are developing tests and vaccines for the growing health crisis. So they are the first bank to ever do this, and they seem to have some pretty solid intentions of doing good and having sustainable investments. Personally, I think that they'll be gaining some sympathy points based off of this move, and we'll likely see their stock price go up this week. So again, I'm looking for a longer term call, 2 to 3 months, with a strike price between $22 and $25. I've covered the Alibaba and the e-commerce sector a few times on this channel, and I think that e-commerce is the new wave, and Alibaba has surprisingly been underperforming the rest of the market, and they are having their earnings call come up, and that is going to be on May 22nd. But I would suggest that you tread with caution if you are going to be buying in Alibaba because they are a Chinese tech company and tensions with China are rising. So considering the price that they're at right now and assuming that they do have a positive earnings report, I'll be buying a short-term 2 to 4 week call option with a strike price of around $215. I'm sure many of you guys have heard of Expedia, and they are having their earnings call, and that will be on May 20th. This is a travel company in which you can book your plane ticket, your hotel, and your rental car all in one site. Obviously, the travel industry has taken a huge hit because of this pandemic, and they're estimated to have a negative earnings per share of $1.04. This means that market analysts believe that they lost $1.04 for every single share of the company. I really don't know which way their stock price will go because they could outperform analyst expectations and give really good guidance, but likely I'll be buying a straddle on Expedia because every time they have an earnings report, they go insane. So look at this one right here. Huge jump from all the way from 110 to 123. And that was before this virus hit. And then they had this earnings report right here in which they dropped from 135 all the way to $98. Insane. So given the market condition that we're in with all the volatility that we're experiencing, I'll likely be buying a straddle for Expedia. Now, the final stock that I want to talk about is Home Depot. And this wasn't a play that I was expecting to make this week, but after thinking about it, I think that Home Depot is going to see a pretty good earnings report, and that is going to be reported on the 19th. As I said earlier, I've been in the process of moving, so I had to go to Home Depot a few times in order to buy some home stuff. And every single time that I've gone during quarantine, they have been packed. Really, and it makes sense. Everyone is isolated in their own house, probably working on some home projects to make their house a little bit nicer. Plus, May and June is always a very popular moving season. Unsurprisingly, they have nearly seen a V-shaped recovery, and their earnings report is said to be pretty close to what they've been experiencing. They've been hovering between $2 and $3 earnings per share. Analysts are expecting a $2.26 earnings per share this quarter. Hopefully, they can outperform their market expectations and their price will surge. So given my bullish outlook on Home Depot, I think that I'll be buying a short-term call option with a strike price between $245 and $250. That is all the stocks that are on my weekly watch list, so let's get into my long-term portfolio. Alright, so I only made one long-term investment this week, and that was in Apple. So I bought this pretty expensive at $317.20. Looking at the 5-year chart for Apple, you can see that they are consistently trending upward every single year. They're coming pretty close to a V-shaped recovery here at $325. Currently, they're trading at $306. They're actually releasing some virus tracking technology. I think this, on top of having so much cash available, this will definitely continue to send their stock up after this virus is over. So that concludes my long-term portfolio. My current account balance is $6,996.60, so we dropped right below $7,000. I am right about 4%, and I lost about $300. Last week I made about $600, so I'm still green, but not as much. Thanks for tuning in today's video, guys. Remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.